Alright, um, tried recording this video once already, and uh, the file type was wrong on the output, which was nice. So we're gonna try this again. Pardon me if my voice sounds dry or scratchy. I've just read all this shit once before. So essentially, what I want to do here is uh, tell the story of what's happened to GameStop over the last week, week and a half. Their stock has exploded from around $40 a share to over $300, absolutely decimating Wall Street, starting a financial revolution, and surprisingly, bringing some semblance of unity to the American people, which I haven't seen uh, in many, many years, but it's fun to watch. Uh, so the question that everybody's kind of asking that has kind of been here from the outside or just started paying attention is, how did this happen? Why did it happen? How what happened? Uh, no doubt, you've probably heard some stories about mischievous red, uh, mischievous redditors banding together to artificially pump a stock up, right? Um, Maybe you've heard it described as an army of basement-dwelling memers conspiring to make a mockery of the financial system just for the lulz. Uh, I'm here to set the record a bit more straight, explain in more detail. Um, these explanations are not wholly false. Obviously, there's an element of this, and in fact, in the later days of the move, um, it pretty much completely became this. But there's so much more to what happened, and I'd like to explain that. It's a very interesting story. So, people who are just now starting to pay attention may not understand that what happened in the last week, uh, it didn't just pop up. It's not a thing that just happened out of nowhere. This this event has been brewing for well over a year, probably a little longer than that at this point. Um, the story I want to tell starts in the fall of 2019. Um, a very bold play at the time was made by a redditor named Deep Fucking Value, uh, and he also has a YouTube. He's known as RoaringKitty. Uh, I'll link that as well, so you can check that out. I'll actually be discussing one of his videos. Um, at the time, uh, like I said, fall of 2019, GameStop stock was worth about $4. It's my understanding that at this time, DFV put down $50,000 on the stock and on stock options. He anticipated a rally for the stock by the end of 2021. Uh, the story that most people want to tell you is that a bunch of kids banded together for no reason, no analysis, simply to pump a stock for a meme. Uh, there was research. There was a lot of research involved. In fact, the only way that you can call a play like this from well over a year out is if some heavy research was done. Uh, and DFV was the one to discover that. So when he entered this GameStop position, right, he posted about it on a forum known as WallStreetBets. It's very infamous by now. You've probably heard, pretty much everybody has heard about the forum. But if you're unfamiliar, I'll give a brief explanation. Um, Wall Street Vets is a group of self-proclaimed autists and retards, or what they call each other. They have a hobby of borrowing money from their wives' boyfriends in order to purchase some extraordinarily risky positions in the stock market. They often lose just about everything they own. Uh, but when they win, and they do win, they win very big. It's somewhat of a tradition when a member of Wall Street Bets loses all of their money, they'll post proof of their loss to the admiration and enjoyment of everybody else. And when they win big, the proof is posted to thousands of people who will respectfully respond, "Congrats," and "fuck you." Wall Street Bets is a casino. There aren't They aren't Wall Street investments for a reason. Uh, they're there to get rich quick or go broke trying. And most of them are broke anyways, so the way they see it is they have nothing to lose. However, they aren't risking their money on nothing most of the time. Wall Street Bets is full of a brand of posts known as DD, due diligence. Yes, there are always people out there that will hear about a popular stock and pile in on the hype train, but that's not where this starts. Every popular stock on the forum starts out as a very good DD post. Members of WallStreetBets will read the analysis, albeit very rarely in full. Oftentimes they'll just read the TLDR at the bottom, which means too long didn't read. It's always at the bottom of a post, and it's just a summary in a few short sentences. More recently, though, I've seen this introduction of the TLCR, which stands for too long can't read. And instead they'll explain the position, usually with the stock ticker and then some rocket ship emojis, and that's enough for the newer crowd. But I say all this to explain that, yeah, there is this hive mind mentality among users on the forum, of course, but many decisions, especially early on, are made for a reason, oftentimes for a good reason. WallStreetBets is a gathering place for millions of individuals to read DD and to survey public sentiment on a stock. And each individual will make their own mind up. They will make their own decision and choose whether or not they want to make a play based on the DD and the sentiment on the forum. The members on the site hold no accountability towards one another. They have no guarantee that others will be interested in the stocks that they like. They're not sitting around saying, hey, if you buy it, I'll buy it. There's no way to trust or expect anything from anyone else on the forum. It is simply for people to post their plays and their reasoning for it. And what others choose to do will be their own choice. Anyways, in regards to the DD, it's not uncommon for bad DD to get made fun of and discounted. And at times, very rarely, good DD will get discounted and made fun of because people don't understand it or think it's too ballsy of a play, even for these people who are very used to losing everything. Very few things are too risky for WallStreetBets, but there was one play that was, and this was DFV's play when he revealed his GameStop purchase back in 2019. Everybody on the forum believed that he truly belonged there because only an absolute moron would put $50,000 on what would become the next blockbuster. Of course, everybody ridiculed him, and today all of those people are worth about $40 million less than he is. And that's being a bit conservative. But so what was his thesis? Why, over a year before this thing shoots off, why did he jump in? How did he know? It was simple to him. In very obvious terms, he simply believed that GameStop was worth more than it was being priced at. And I know that sounds like an obvious claim, but essentially what had happened was the stock was being aggressively shorted by the market and by these massive Wall Street hedge funds. The stock it overwhelmingly had a very negative sentiment. And at the price of $4 a share, DFV considered this to be unreasonably depressed. In other words, that the stock price was unfairly pushed down by this negative sentiment. And so I'm gonna try and explain at least part of DFV's thesis, but he has a video on this thesis that he made back in July of 2020, and I'll link the video, but he spends the whole time doing some very deep fundamental analysis. He has this posted on his YouTube channel, RoaringKitty, and the video is like an hour long of this guy digging through spreadsheets and presentations. It's obviously not the most exciting stuff, but it is very entertaining to watch in hindsight, and I wouldn't expect anybody to watch it through all the way, but definitely check it out and skim through it and just see the kind of work that he was doing on the stock. Anyways, at the time of making the video, GameStop was worth $4 a share. And this was in July. It was also worth $4 in November of the prior year. It had been 6 months almost, and it hadn't moved. It was hanging around $4. DFV thought that this was wrong. He posted 3 main reasons for this, what he considered to be an unfair valuation. They go as follows. First of all, He felt that the risks associated with the video game industry going digital were overblown. In other words, that there was still a place for physical sales in the industry, and that the shift to digital would take much longer than people seemed to be anticipating. Two, he believed that negative sentiment on the stock was extremely overblown and, more importantly, wasn't based on any actual security analysis. And lastly, three, he believed that the company's real value was overlooked, that nobody was actually checking the books and seeing um, the valuation of the assets of the company. Um, and throughout this video, DFV digs through a bunch of these presentations and financial reports for the company, and he comes up with a calculation for what he believes to be a fair value for the company. With a stock price of $4, GameStop had a market cap of $260 million. Using some conservative estimates, and he explains these assumptions in detail and why he believes them to be as conservative as they are, DFV values that the company should be worth roughly 2 times that $260 million, which would put a share price of $8. He argues then that for the current valuation to be accurate, you'd have to have one of the most bearish outcomes that could possibly happen. You'd have to be cataclysmically negative in order for the company to be worth what it was trading for. It just didn't add up. And using this new valuation, DFE predicted the following about the stock price. Uh, quote, he said, "I think it's at least a double. I think it's probably a triple, but it could legit be a 4 to 5 bagger." Meaning the stock price on the low end could hit about $10 and on the high end 20 or more. And the best part about this video is that DFE made a prediction for the time frame for which this would take place. And he argued back in July that the stock would reach these prices about 6 to 18 months from the video's original posting. Today is 2 days past that 6-month mark, and the stock price is over $300. It's a really good call. Obviously, that's much more than that liberal estimation of $20 a share. So how do you go from $20 to $300? That obviously doesn't make any sense. That's not obvious. So how did we get here? There's a lot of the story left to be told. In the title of DFE's video, he mentions the fact that short interest on GameStop stock was over 100%. I'm going to leave out the technical details of what that means. You can find that elsewhere, but essentially, short interest is a measure of how much of the stock is being invested into. How much of the stock that is currently available is being invested into plays that are betting on the stock going down in the future. What you need to understand is that somehow over 100% of available shares were being used for these short positions. And the maximum upside gain for a short position at the time was only $4 per share. Whereas the maximum potential loss was essentially infinite if the stock started going up. There's only one group of people in the world who would make a play where they stand to win $4 and lose an infinite amount of money. There's only one group of people so greedy, so ignorant to risk this infinite loss because they don't think anybody will go and look into it. And that's Wall Street. It's obviously Wall Street. And by the way, a stock is considered to have a high short interest rate at 60%, and that's rare. That doesn't happen. For a stock to hit 100% is extremely unheard of, and GameStop hit a short interest rate of 140%. You can see the hole that's being dug here. If there's a super high short interest rate on a company and the stock price starts to go up, then there's the potential for what's called a short squeeze. And in a short squeeze, essentially what happens is that people who shorted the stock are now faced with this infinite potential loss if the stock price starts going up. The more it goes up, the more they lose. And that's obviously not a good thing. So in order to cover their asses, they need to close out of their short positions by purchasing the stock at a loss. Now, when they purchase the stock to exit their position, it forces the stock price to go up, which forces more short positions to exit and buy the stock, which causes the price to go up and more people to exit, and so on and so forth. Basically, it creates a positive feedback loop, forcing the price up. At the end of DFV's video, he mentions the possibility of such a short squeeze, but he says, those are rare. I wouldn't count on it. I wouldn't hope for that. 4 to 5 times our investment would be good. Uh, it'd be a bit much to hope for anything more, which is very funny in hindsight. So, quick summary where we're at so far. The price is worth $4. It has a potential valuation 2 to 5 times that value, and because the short interest is so high, any rapid increase to those fair valuations could trigger a short squeeze, sending the stock price to the moon. Um, all of this info is publicly available. It's out there. All it took was somebody to go and crack the books open and go and look for it. Um, even back in July of 2020, 6 months ago, uh, you could just go look. It was there. Um, and so when DFV posts this thesis, essentially, some people are paying attention. They read it. They think, okay, this is good. I'll buy the stock. Other people dismiss it as nonsense, and they only realize that mistake later. I'm sure they're kicking themselves right now. Uh, Anyways, as the stock inevitably begins to rise and meet those fair valuations, the DD gained traction. Uh, People started to realize what was happening and that DFV was onto something. Uh, the stock hit $10 in September. It hit $15 in November, and it fluctuated between that $15 and $20 throughout the first half of January. During this period, and by the way, you're getting really close to that five bagger that he was talking about. Uh, During this period, more and more people on WallStreetBets become a part of what they called the GME gang, basically a bunch of cheerleaders for this stock, and they begin buying and holding GameStop in order to prepare for the short squeeze. It seemed likely that this could happen. It definitely wouldn't have been a surprise to anybody if it did happen. Um, there wasn't a guarantee of that short squeeze, but everybody saw the DD, they saw the research, they knew what the price increase from $4 to $20 with such a high short rate could do, and WallStreetBets took that bet. Um, really soon throughout the forum, diamond hands and battle cries of "Hold the line" echoed, and some people were just YOLOing, right? Some people were just jumping onto the hype train, but most of those guys that got in before $20 had read the research and knew what they were doing. This was a calculated play. Um, and then the incredible happens, right? January 13th, there's a breakout. The stock price shoots above $20 and finds itself in the $30 to $40 price range. Um, we're past that 5 times amount that DFV had originally claimed. Something's going on. Hype begins to take hold. GME's going to the moon. Everybody's excited. It just needed one little push. And I'm going to take the time here to introduce a new player to the game. It's a smaller hedge fund that goes by the name of Citron Research, and they're quite possibly responsible for this last push. Um, Essentially, Citron Research had a very large short position in GameStop. They were one of the people betting on it going down. Um, this group was very certain that GameStop would crash and go back down to what they considered to be normal levels. In fact, they prepared a now infamous presentation called Five Reasons Why GameStop stock would go down to $20. Um, this presentation was planned to be live streamed on Twitter on January 21st, which was a very, very important day. You see, in the United States, we elect a new president every 4 years on a very particular day of the year. It's the same day every time we do it. Um, Everybody knows exactly when this day is. And I can tell you when the next one is. It's on January 21st, 2025. It's always January 21st. It's very easy to predict, but Citron Research didn't do that. They were caught by surprise on inauguration day that that there would be an inauguration. And so, they decided to cancel the live stream in order to observe the inauguration. Uh, Obviously, uh, you got to understand that this is a really big deal because Citron Research decide they're basically the face of the bears. They're the face of the people shorting the stock. And they screwed up so big saying that they weren't aware of the inauguration. Uh, Clearly, there's not some great research being done here. And so, they canceled this live stream. They didn't come out to give their reason for why the stock would crash. And so, naturally, in response, the price shoots up into the $40, closes the day at 43. The rocket ship was almost done fueling up at this point, and it was just about ready to lift off. Um, there was one final mistake that did it. It came the following day on February 22nd. Citron rescheduled their live stream for Friday morning, um, but unsurprisingly, they couldn't get it to work. the The live stream crashed, and they ended up blaming it on hackers. Um, Nobody knows how one could hack the Twitter live stream in the way that they claim. Uh, their claim was never substantiated to any degree by anybody ever. Um, but once again, the bear thesis for GameStop was not given, and in response to this failure, the stock price jumped up again into the $50 price range. I guess one important note: the all-time high for GameStop's price at this point was $60, and that was way 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 back years and years and years ago when the company was doing much better than it is now. So at this point, we're kind of flirting with an all-time high. This is a big cause for excitement. Um, Back to Citron. They made one last stand. They decided now, screw the live stream. Uh, we're gonna release a pre-recorded video on Friday afternoon, and we're gonna give our 5 reasons why GameStop stock is going to $20. Um, they waited till the end of the day, a little over 1 hour before market close. They did release the video. And to nobody's surprise, in response to them taking that action, uh, GameStop shot up. And within that last hour, it closed at $65 for the day, beating the all-time high. See, Citron did release their 5 reasons, but they were incredibly embarrassing and very unconvincing. There wasn't anything technical about their thesis. Um, they have a very infamous tweet now where they had said, stop betting on the price to go up. We know more about shorting than you do, and you're gonna mess everything up. And that's why everybody was anticipating this video. Teach us, tell us why we're wrong. Everybody said. Um, and one of these 5 reasons that they give, essentially, um, it was about how retail investors should know what they're up against. You should know your competition, and you should know who's on your side. Citron says, hey, you retail investors, you're up against Wall Street. And Wall Street understands the market so much better than a bunch of stupid, poor people who are learning the stock market in their basements because they lost their job during a global pandemic. Yeah, that was a really bad take. They shot themselves in the foot on that one, and so the invisible hand of the market gave them a very nice middle finger, and GameStop began its meteoric rise. After that day, Citron declined to ever comment on the stock ever again and has since stated that they're done shorting stocks. They will only open long positions from now on. Uh, there's nothing more to say about that. So on January 22nd, the stock closes above $65. The short squeeze must be happening, right? No, not quite yet. We're getting there. We're very, very close, but WallStreetBets kind of underestimated how stubborn and greedy Wall Street was. These major hedge funds, they refused to close their short positions at a loss, any kind of loss. They wouldn't do it. Um, in fact, they entered into even more short positions. They doubled down on their horrible investment. Uh, at this point, Wall Street is betting against Wall Street's betting against Wall Street bets, but they're betting that the stock is going to come crashing down. they think that they can outweigh or outweight Wall Street Bets. And there was a quote that was going around at this time, and I love to mention it. Um, Wall Street Bets users were throwing around the statement, "We can remain irrational longer than you can remain solvent," which means basically they're saying they can do stupid things with the market until you go bankrupt. So just sell, just sell at this point. Um, they didn't sell though. Unfortunately for Wall Street, January 22nd was a Friday, and on Friday, options contracts expire. And this is technical, so I won't explain it fully here, but the gist is that there are two kinds of options. You can buy a put contract, which means you will make money if the stock price goes down, and you can buy a call contract, which means you can make money on the stock price going up. Um, Options always have an expiry date, and these expiry dates usually end up being on Fridays. Uh, Not all of them, but the vast majority, and certainly for GameStop, they were on Fridays. So now, when an option expires, they either expire in the money or they expire worthless, depending on if they are above or below a certain price threshold that the contract lists. On Friday, the highest bet that you can make on GameStop's price um, was that it would reach $60 or above. No contracts existed above the $60 mark. Uh, since the price closed at $65, every single contract in existence expired in the money. Conversely, every put contract expires worthless. This means that everybody who bet the stock would go up, uh, they made a disgusting amount of money, and everybody who bet on it going down lost big. Um, and when you own a call contract that expires in the money, it means that you have the right to purchase 100 shares of the stock at a lower price than the market price, which you could then sell for the profit. Um, this means basically that somebody needs to sell you those 100 shares, which means somebody needs to have those 100 shares, and they didn't have the 100 shares, which means now for every single call contract in existence, somebody needs to go out and buy 100 shares of the stock price at $65 so that they can sell you the contract at the lower price that was bet on. Uh, so just to clarify that point, the amount of buying pressure that's about to happen. For every call contract in existence, 100 shares need to be bought at $65. Hope you see what happens next. We're getting there. On Monday and Tuesday, this is the game's. This is it. This is when it happens. The rocket ship takes off. Monday and Tuesday, buying pressure through the roof because of all these shares that need to get bought. Uh, this was called a gamma squeeze, and I've simplified it a lot, um, but this is the general idea. Anyways, the price shoots up. By the end of Tuesday, GameStop's worth $150. By Wednesday, $350. It's going parabolic. It's going very quickly. Uh, and the Wall Street hedge funds, they lost tens of billions of dollars at this point. Billions, not millions, billions. And because they decided to short the stock at such extraordinarily high levels so that they could make a max profit of $4, uh, they took on this risk. It just wasn't smart. It was so obviously dumb and greedy, and people called them out on it. Um, that's really, at the end of the day, that's all there is to that. And they wouldn't exit the positions. They kept buying short positions, and so they kept losing money. They just they couldn't be wrong. Um, there's some level of hubris involved with not backing down at this state, and honestly, some level of stubbornness that goes both ways. Um, but Wall Street lost at their own game. Um, they entered into an extremely high risk position with infinite downside because they didn't care. They didn't think anybody would pay attention or call them out on it. And when the trade turned against them, they just held. Um, they could have reduced so much loss if they just exited their position when the stock hit 20 or 50 or 100 even, but they didn't want to take the loss, and so um, Wall Street bet against DFV, who discovered their mistake. They bet against WallStreetBets for understanding and believing in this very, very good research. And they bet against the American people for jumping into GameStop after hearing a story about broke Reddit investors finally beating Wall Street at their own game. It was kind of an inspirational story. And, it kind of became a bit of a movement at this point. Obviously, for a minute it was a meme, but then it kind of became, uh, yeah, I don't have another word. It became a movement when people realized that they could very easily screw over Wall Street, who had been screwing them for years. Finally, the people that were responsible for the housing crisis in 2008, uh, they were going to lose for once. And everybody liked this idea. And so now, people are buying for the fundamental analysis, people are buying for the memes, people are buying for the hype train, and people are buying um, for a kind of political movement, if you could even call it political. Uh, it became something deeper. Holding the stock was no longer about holding, a position to try and make profit. It was about it became a protest in a way. Um, but then Thursday happens, and Thursday was a pretty complicated day. Essentially, what happens early morning on Thursday, the price is continuing to go up. I think for a minute it hits $500. There are um, photos of people that were able to sell at 1,000, 1,500, 2,500. These insane prices. Just a few people though. Um, and so all the brokerages, which are where people buy the stocks from, basically came out and they said, hey, you can't buy this stock anymore. You can sell the stock if you own it, but you can't buy it anymore. And so immediately everybody starts freaking out. We can't buy our stock. There's no upward momentum. There's no upward pressure. We can't do anything about it. All we can do is hold on to our stock and watch as we lose our money and watch as Wall Street sells off their positions and gets out of this scot-free without anybody being able to do anything about it. Um, this is a pretty dark moment for everybody that was holding the stock in the U.S. However, at the darkest hour, when all people could do was watch as they lost money, something really, really cool happened. All around the world, and countries all over the planet, uh, people discovered that in their countries they were still able to buy the stock. Yeah, it was only people in the U.S. that were locked out of buying the stock. And so, rallying behind this movement, all these people from all over the world start throwing their money at this thing. Uh, the stock bottoms out at $190 and starts coming back. And on Friday, which is when I'm writing this, the stock closes at around, I believe it was almost $320. Wall Street uh, does this incredibly scummy move in front of everybody, and they still lost. They lost because people all around the world called them out on their bullshit, and Wall Street pissed everyone off. I mean, hell, even AOC and Donald Trump Jr. agreed on something. I've You'll never see that again. It's insane. Um, I'll probably spend some. Well, okay. I'll finish this and then I'll come back to a point. Um, Nobody knows really what's going to happen next. Maybe GameStop collapses down to $20. Um, with a short squeeze, that's usually how things happen. Is the price skyrockets and then it comes back to earth. That's what at least a lot of people on Wall Street Bets believed would happen for the longest time. That's what I believed would happen for the longest time. But that was, you know, before it became this kind of weird movement thing. GameStop stock kind of became a symbol of giving it to the man, right? And their motto, "Power to the players," kind of became a very interesting rallying cry, right? The stock now it kind of meant something more than just being a profit thing. Um, and so maybe people hold out of spite. Maybe people just um, hold the stock just to screw over Wall Street. You know, maybe they don't sell. maybe the price doesn't crash. Um, I don't know. Uh, Today I purchased one share of the stock, fully expecting it to lose all of its value. Um, I made $1,000 on the stock on the way up, and the least I can do now is purchase a share and risk $300 on it. Um, at this point, I'm not buying for any kind of profit. I fully expect it to lose all, if not most, of its value. But like I said earlier, it's kind of a protest at this stage. Um, and anyways, to quote DFV himself, the man, the myth, the legend. What's an exit strategy, anyways? Now, that's the whole. That's the overview of the story. I do want to go back in more depth on one point, which is what happened on Thursday. Um, this is basically the day that gained the most media attention. It's the day that all of these brokerages shut down the ability to buy, but not the ability to sell. Um, Everybody becomes very outraged at this point and starts claiming market manipulation, which seemed like a very reasonable claim at the time. As the day went on, um, more information comes out, and we have a better idea of why what happened. And the truth is scarier than just market manipulation. The truth is that the entire United States economy almost came down on Thursday. Uh, Essentially, in my understanding of this isn't as well as the other events, but essentially what happens is that behind the brokerages there exists what's called a clearinghouse. And they're the ones who basically have a large pool of money and are able to move money around to support transactions that are happening. Uh, at any given time, they need to have a certain amount of money liquid. And if a lot of transactions of high value are being taken place, um, money takes time to move in our system. It can take 2 to 3 days to get transferred between accounts. So if a lot of money is moving around very quickly, um, that pool of money that they have on hand starts to dry up and disappear. And so what these clearinghouses do at this point is they realize they're very quickly running out of money and may not be able to support any transactions that take place on the stock market, which means you could sell your stock and not receive any money for it. And that's a bad thing. Uh, that is basically the death of the stock market if that happens, and pretty much the U.S. economy with it. Uh, and so let me reiterate, we were very, very close to that happening. Um, so at this moment, um, what they decide to do is they tell the brokerages to stop allowing people to buy GameStop, um, which is a questionable decision, especially considering they allowed people to continue selling the stock. Um, in my opinion, this is wrong. If you're having liquidity problems on the back end, it makes sense to stop buying and selling, just pause trading of these stocks for a few days. But that's not what they did. And so it's understandable why everybody is as upset about it as they were, but it's important to note that it wasn't purely a blatant example of Wall Street cheating the game. Obviously, there's a little bit of that, but there are also technical reasons behind why it happened. And that's important to know. I know following this event, a lot of people start going after Robinhood, which is one of the stockbrokers, one of the most popular ones for retail investors. And first of all, Robinhood was one of many brokerages to do what they did, and everybody has singled out Robinhood, which I'm not saying they don't deserve flack because they absolutely do. But there are other brokerages as well that deserve some criticism leveled at them. Um, but it's important to understand why things happened instead of just piling on a hate train. When these stories get so big, um, it's easy to get carried away with what sounds like a good story and ignore the technical elements. And that's not good. We can't do that. So, anyways, that's just something to be aware of. The main thing that we're sitting at now is um, short positions on GameStop have started to close out, at least a little bit. Uh, by my understanding, at my last reading, we were sitting at about 120%, maybe a little less. I think 112 to 120% of the stock was still shorted, which is, I mean, it's still over 100%. It's still an absurd amount, but it's less than 140, which means Wall Street is selling off. Um, there's definitely a question out there about, how much further can this go? Um, how much higher can the stock go? And when the stock does continue going, what's going to happen? As I said earlier, maybe everybody just holds and the stock just stays put at wherever it goes to. That seems incredibly unlikely, but it's possible. The alternative is that the stock comes crashing down, and anybody who bought in late is going to lose a lot of money. You know, maybe they bought into the investment as a protest, in which case, they're aware of that potential loss. Um, maybe they're not. Um, and so maybe a bunch of people are going to end up losing a bunch of money on this on the way down. Um, it's worth noting, and it's also worth reiterating. If you don't understand how this works, or the potential risks involved, or what might happen on the way down, um, don't jump in. Don't just jump in for the meme. Don't just jump in for um, hearing everybody talk about it. Maybe you're really excited to stick it to Wall Street, but don't hurt yourself in the process. Um, Wall Street will find a way. Um, they'll probably make money off of this on the way down and recover some of their losses. Uh, at some point in this equation, regular people get screwed. And so be aware of that. But that's that sums up the situation. Um, I guess in summary, I hope now it kind of makes sense how we got to where we got to. Um, but when I started out, I kind of just wanted to dispel this notion that all that this was a chaotic, hive mind of people wanting to pump and dump the stock. Um, it's not a true story. Uh, at the very least, it's not the full story. And I think people deserve credit for the research that they did and the efforts that they put into actually learning how things work and making one of the biggest plays in financial history from their basements. Uh, it's truly brilliant. Anyways, that's I think that about does it. Appreciate it.